Republican State Senator Paul Bettencourt of Houston, thank you so much and welcome back to Eye on Politics.
Uh, Jack, glad you have me back.
So let's start with this deal that the House and Senate have struck on property tax relief for both homeowners and businesses. Um, how big of a deal is this?
It's really a big deal because this is basically tax relief to every home and business owner in the state of Texas. And we're not talking just minor amounts of money, we're talking about billions and billions, literally. And for all homesteads, all 5.7 million, wherever they are in the state, the first thing we're going to do is raise the homestead exemption up by 40% to $140,000. And then we're going to do more for over 65 disabled homeowners. We're going to raise that up to a net $200,000. But wait, we're not done yet. We're giving the businesses a $125,000 exemption on their business personal property tax. So there's exemptions are very powerful tools because people don't pay the government. And in this case, the vast majority of this is independent school district money. They just won't pay it. So it's going to result in tremendous savings for all home and business owners for as long as they own their home or their business.
And to your point, and just to make clear for everybody, this is just on the school property tax portion of their property tax bill.
It is for the homesteads, okay? For the business tax, it is actually multidisciplinary, so multi-jurisdictional. So for the homestead exemption, which is by far the big savings because of the numbers of homesteads and how much the $40,000 saves, it's about a $3 billion item, but that means that with the budgeted amount of compression we've got plus homestead exemption, it's going to save about almost $500 for the average home. For the
Go ahead, I'm sorry.
Yeah, for the over 65 and disabled, that gets popped up to a savings of $950. But again, this is a little bit more it's more actually it's a bigger news among the over 65s because 43% of them are already not paying taxes because these are people that have frozen their bills effectively 5 or 10 years ago. And we passed amendments that said if we raise the exemption for them or we lower the tax rate, they get to change what they bill. So we're guessing over 60% of over 65 disabled will pay zero, and you've got the right number, zero ISE property taxes if this is approved by voters in November.
And do you expect that will be the case?
Well, these have been off the charts. The last three amendments that we've had, Jack, and from really from May of 2022 and also last year, passed by 83, 85, 87%. I think the over 65 exemption could pass by close to 90 because people, I think everybody recognizes that if you paid a lifetime of taxes, especially school taxes, which is what this exemption is for, then you should get a break.
And let me ask you, because this is on top of what's called compression, right? So
Right.
that's the replacing of property tax dollars with sales tax and other state revenues to pay for public schools, right?
Right. And what we do is we buy down the rate, but then we hold the school districts harmless so they don't lose any money. So for school taxes, this is a win-win because we've got some excess, obviously, revenues that we use to buy down property tax rates. And then we add these exemptions on top of them. And the good news is that that's powerful savings for the homeowners, both up to 65 and then even more over 65 and disabled.
And how much does, with SB 4, SB 23, and HB 9, those three bills, plus the compression that you just talked about, what is the total amount of new savings during this, next 2-year budget, in addition to everything else, right? So
Right.
this is in addition to what was passed and signed off on by the voters. So how much of it is new additional savings?
It's over $10 billion. Okay.
So over
Yeah.
10 billion.
Right, it's over 10 billion. And this is a great question because you have to effectively think of every biennium as like a pot that you have to pour in money to lower property taxes. So we're pouring in over $10 billion this year. So it's a substantial additional savings, but it's the budget compression with the $140,000 exemption plus the additional over 65 exemption plus the business exemption, all packaged into one deal. It would be over $10 billion. So I mean, it's not a world record because we set that last time because that was a world record at 22.7 billion. But 10 billion is certainly an important milestone. It's also something the governor was looking at as well to make sure we hit that mark.
And as you know, some conservatives have said they want to see more and that this was not enough given the nearly $24 billion budget surplus that the state legislature had coming in. What do you say to that?
Well, a lot of that is driven by a theory that you should be able to eliminate all property taxes. And the problem with that is that we don't have $86 billion to eliminate all property taxes. If we did that, that would be like 86 out of $94 billion a year that we have to do everything. So the right answer here is just to keep chipping away and doing what you can to help people when you have surplus money to help get their property tax bills down. So this is a very responsible step because we also have to look at sustainability. That's why we have the voters approve the amendments because that means the prioritization is going to be the homestead exemptions, and if the voters approve the business personal property exemption too. We haven't voted on one of those, quite frankly, ever. So, um, but again, that's why the voters say yes, we want this exemption, and then the legislature has to make it a priority to fund it, and that means funding it in good times like now and in bad times to come.
And let me ask you, because when you talk to people about this, they always seem to tell us that they're still feeling the pinch, and they wonder does the state still have to keep doing this if there was all this talk of a record property tax relief, as you just mentioned. Why does this still have to continue? Why do they feel as if their tax bills continue going up, even with all of this going, this relief?
Well, right. Well, true. Now, the good news is for over 65 and disabled, because of all the reforms we've done from 2022, 23, 24, 21, pick a number, it's all this last year. Their bills are actually going down now, Jack. All of them on average now go down. And they will go down every year that they own the home as we compress or raise exemptions. So, so they'll see that finally for sure. They've seen it the last couple of years and they're going to see it again this third year. And I think that's going to knock out a lot of the skepticism of whether or not these reforms work as their school taxes continue to go down year after year. Now, the other things that we've been doing is we've also, in 2019, dramatically slowed the growth of government by lowering the rollback rates, which is the rates that people can raise last year's revenue for cities and counties, and especially those. And so we're looking at all of this, but that's also why we've made major changes to let people vote. And this is a big difference, Jack. You've noticed there's taxpayer ratification elections, there's bond elections, there's elections above the voter approved rate. We're really bringing the public into setting their tax rates more and more because they get a chance to choose whether or not to have these additional expenditures. And we're also passing more bills to say, to make sure that people know if they vote on a city and a county bond issue, it's a tax increase. We're passing bills to make sure people know that that if you go to a bond issue and it fails, then it's going to take a super majority of the taxing unit to bring it back within the same year and have it voted again. So the one of the keystones of all these reforms since 2019 is the idea that people get to vote on taxes. either higher maintenance and operation taxes and debt taxes, but also in schools if necessary. And people were feeling the pinch, as you said, Jack, because 2/3 of the tax ratification elections went down by the voters because they are feeling a pinch. And that goes back to the point of why are we continuing to do it? Well, the public is feeling the pinch. So we're trying to help. And especially on over 65s, we took really important testimony from the silver haired legislature. And they told us that 80% of the seniors in Texas have only $36,000 of disposable income per year.
Mm.
So when we give them back $1,000 or $950, that's big news to them. And it's important to recognize that we don't want to tax them out of their homes that they paid for over their lifetime. So that's why we're Lieutenant Governor Patrick's very strong about this. Speaker Burrow's very strong about this. We're trying to make sure that we keep them in their homes, and that's our top priority this session, as well as helping everybody else. Because look, hey, a 40% increase in homestead exemption is a big number. Okay, not even counting the increase for the over 65s, which is huge by itself.
Couple more questions, and just going back to the point you just were making about, I guess, the limitations that the legislature has placed on the cities and counties and other taxing districts, hospitals, colleges, etc. And the Texas Comptroller put out a report earlier this year in January that showed that these other districts, entities other than the school districts, had big increases in the last year as far as revenues. And so I'm wondering, are the limitations that the legislature has put in place really made a dent in this?
Yes, they have, and Tatara and others have done studies that show that the growth of city and county taxes since 2019 is about half that of special districts. Now, part of the way the comptroller reports the numbers, they have to report new MUDs, they have to report new growth, because when you start a new taxing jurisdiction, that also adds to growth as well. Now, a couple of key things that we're concentrating on now is that we've had taxing units take advantage of disasters. In fact, Harris County, number one, okay? They had almost no appraisal roll growth. They had a hurricane, category 1, knocked out the power. There was, unfortunately, a slight loss of life, but this was nothing like Hurricane Harvey. They jacked up the taxes 15% by raising the rate. So we've had to eliminate how much they can take for emergency expenses. And we've literally got that bill, it's actually in the House being voted on as I speak. Now, not to be outdone, because I'm not trying to make this a partisan issue, I've got a major county, Montgomery County, that there was because of Harvey, there was a part of the law that said, well, okay, if you're good and you're working your tax rates on a low period and you're below the voter approved rate, you can bank the difference between the voter approved rate and the no new tax rate. But you have 3 years, and then you can put it all on 1 year. And what happened in Montgomery County, which is the biggest red county in this state, those commissioners raised taxes by 10% without a vote, like that. So we've got a reform bill that's already out of the Senate that reduces that and makes it just a 2-year increment, because that third year was just a huge shocker. So we're looking at all of this because, look, you've got to have responsible growth, but you also have to have the taxpayers involved in the process, especially on debt. And then you have to let them vote for higher tax rates. And what happened in Harris County's case is the county judge said it was an 8% increase. The real number was 15. And it barely passed, even though people were saying the 8% number was wrong. So part of it is that we're changing what happens if people do that intentionally. And look, nobody likes paying taxes, but what you have to realize is that government has to slow the growth of their growth, government in total, because if you don't slow government's growth, then I don't care whether it's income taxes, property taxes, sales tax, you're going to be paying more. So we're putting a lot of emphasis in that, and we've got great cooperation this year between my counterpart Morgan Meyer and the House Ways and Means Committee, Speaker Burrows, Lieutenant Governor Patrick, and my committee as well.
And then I know at the Senate hearing, at your hearing the other day, the city of Fort Worth's budget manager was testifying, and he said that increasing the business tax exemption will shift the burden onto homeowners. And I guess it's because what you said before, unlike the homestead exemption increase, the increase in the business tax exemption will hit county and city revenues in addition to the school
And special district too.
and special districts. So talk to me a little bit about how that shifts back onto homeowners.
Well, this is one of the reasons why in homestead exemptions, when the public votes, we tell the assessors use the higher number, the higher exemptions, and it's already in their tax bill, and it goes into effect like that. We tell on the business taxes that to wait till next year. And we do that because first off, we have to get an affirmative vote, but also because we're dealing with other districts, they have to plan for the change. Now, we had a really good testimony. He was testifying on, which was not in favor for, he was just bringing public information in. And the business tax, which will save the average business owner about $2,500, which is big money for a small business, okay, would cost them less than 1% of their budget. So we want them to know in advance that exemption's there. And then they can decide what they're going to do with what they need to do with their revenues. But yes, for cities, counties, and special districts, they'll have to make that up. But that was a great example of even a big increase, because right now the business, it took me 4 sessions to get the business exemption up to $2,500. And now we're really leaping up because that was a priority of Speaker Burrows and Chairman Myers. So, but even with that, it's less than 1%. And remember, they're growing. And that was the point I made back to him. It was a great discussion. Senator West was also interested in it. And I said, this is less and more because you're going to grow, but now you know you're going to grow less. So they can plan for that. And like I said, it's a change. It's less than 1%, but of course that's significant.
And then I always get asked this question, I'm sure you do as well. What about the renters?
Right. Well, the renters are going to get the effect of compression helping their landlords wherever they are. They're also going to get the fact that their landlords, if they're in business, which they all are to some degree, they're going to have less money on their business personal property taxes. And in a marketplace that is competitive, that what we've seen, all the national studies show that if you're in a competitive marketplace on rents, then when taxes are cut, that actually gets to the renters because they can't afford to jack up rents. And this is a way to help them not jack up rents. So that's the way the macroeconomics of this work. And because Jack, we've gone through all these other issues. We've looked at all this. Rent controls hasn't worked in San Francisco, it doesn't work in New York. And because renters don't have ownership, you have to look to the market to help them. So we look to tax cuts to help the landlords, and especially in a rapidly accelerating rental situation, tax cuts do have a tendency to get passed on to renters.
State Senator Paul Bettencourt of Houston, thank you so much. We appreciate it.
No, thanks, Jack.